Good morning and welcome to the Leadership and Insurance podcast. I'm your host, Alex Bond, and I'm very lucky today to be joined by Doug, who is CEO of Stable. Doug, how are you?
I'm good. Yeah, thanks for having me, Alex.
Yeah, not at all. Absolute pleasure. We've got to give a shout out to InsurTech Insights because we met at their London event. What was it, a month ago now? Was it a month ago?
About mid-March. And we had I think you were maybe 10 or 11 into the networking meetings, and we just had a really nice chat instead of like here's my business, here's your business. It was fun. I don't know if we clicked or whatever the reason was. Maybe we were both done with talking about our companies. Instead, just decided to kind of wing it and have a bit more of a real conversation, like a human would, instead of like a networking type thing.
I think that was the timing was interesting on that event though, because there's so many people said to me, and I'm sure you had the same thing, that a lot of people, it's their first event since the pandemic. And I think there was a genuine joy, people were just joyful to be in the company of people. So I felt less of the hard press of selling than normal. Although it's usually me that should be selling to other people rather than people selling to me. So maybe I should have been doing more selling, but I definitely wasn't.
Well, yeah, I don't know. I feel like maybe that's the soft sell, right? Because now I'm in gender. I feel really I want to know Alex better. I want to hang out with him on a personal level. And so maybe that doesn't scale well for your business, but it definitely worked in our case. So
no,
right.
Well, it's a nice strategy. I'm going to try that. I'm just going to befriend everyone in InsurTech, and then eventually they'll feel obligated to work with me on the recruitment front.
Right.
But look, I've gone off tangent straight away. But Doug, obviously, we wouldn't be the podcast without starting with explaining who Stable are. It'd be great if you could explain the Stable business and what you guys do.
Yeah, so we're a commercial auto MGA focused on the mobility space. So things like rideshare, carshare, delivery. And how we got here was, so I used to be an attorney. I worked at a company called Mercer, one of the Washington McLennan companies in New York. Did data security, some IP stuff, contract review, things like that for them. And at the same time, I had this side business of a fleet of vehicles in New York. I feel like even attorneys, unless you're a billionaire in New York, you probably need a side gig just to make ends meet. So my side gig was a friend and I started this fleet of vehicles where we buy a vehicle, put it onto the Uber and Lyft network, get it insured, get it licensed with the city, and then rent it out to typically immigrants that were coming in and didn't have credit, couldn't afford down payments on cars or insurance or things like that, and they would use it primarily for Uber. And what we noticed was there was not an insurance product that really fit our need, and kind of all the technology we were putting to the vehicles, all the automation that we were using. We were collecting data from the platforms themselves to help make credit decisions on who we wanted to rent to, and just realized there was a huge shortfall kind of up from the insurance perspective. And so as we went out and talked to other fleets and then individual owner operators and just the platforms themselves and a lot of new companies that were trying to start up. So a couple rideshare oriented companies that wanted to compete with Uber and Lyft. Unless you got to a large scale, there wasn't really an insurance solution for you. So that Stable was born out of that, really trying to solve our own fleet's needs. And then as we saw more and more people having this problem and realizing that it was as these industries scaled up, and then the pandemic kind of blew the delivery thing up, and rideshare is coming back from that. Car share is a huge thing in the US now. And so I just see this problem starting to expound across new types of mobility, especially where you have mixed use of personal vehicles. And that's essentially what Stable is solving for. So we have our first product going live. Our very own first product is an MGA. We were a digital broker for a while, shut that down, and now focus just on our own products. That goes live in Illinois, and it's a product for owner operators. So not fleets right now, just somebody who owns a vehicle, uses it for rideshare. Goes live in June. So we're really excited about that. We have a car share product that's going to shortly follow that, and then a fleet rideshare product as well. So we'll go state by state in the US. It's a little bit different than the UK and how you can, in the EU, and how you can operate. You have to typically go into each state individually, which is a bit of a hassle, but definitely works from a moat perspective, right? So once you get launched in a state, then it's a little bit harder for anybody else to kind of follow up for a period of time anyway.
Awesome. that is one of the more complicated side hustles that I've ever heard anyone have. Like, side hustle is supposed to be, I drive an Uber at night and I'm an attorney. You're like,
right.
Oh, we rent fleets and then we have to credit score people and put them in, like,
It was, I would say, our thought about how uncomplicated it would be was harsh. The harsh reality of it was, I was picking up cars on weekends that people would abandon. I'd started dating my wife around the time I think we got married, during us running that, and she's like, "What the hell are you doing? Like, what, you're going to like Connecticut or 100 miles away to like pick up this car? Like, what are you doing? Like, what is your real job?" So it was much more difficult than we had anticipated. One of the reasons that we did some of the data collection was just to stop those issues from happening or have them happen less often, and then kind of stumbled upon the value from an insurance perspective, all this data that we were collecting and how valuable that was from a loss control perspective as well.
Mm-hmm. Do you think there's something in that? I've got to ask you as a founder, how important naivete is to success in entrepreneurship?
Yeah, so actually my first co-founder, Stephen Decker, still with us. He would say, if he knew how difficult this was going to be, I think everything in insurance is more difficult. Highly regulated space is difficult. I think it's probably a little bit easier for other startups, but even then, I think for you to think about how long it's going to take to either get that first customer, get that first partnership or that first deal, and then to get the first investor, and then to start the whole cycle over again so you can get like the next investor. Yeah, you have to believe that it's going to take less time than it actually does. I heard it explained once. So there's another founder giving a talk on just like his journey, and he explained it as like, I've climbed to the top of this mountain, and then I see there's another mountain that's a little bit further on, and it's a little bit higher, and I just need to get to that next one, and then I'm to the top, and I've summited. But then you get to that one, you're like, there's another one that I have to get to. And so I think you have this view of like where you're trying to go in the short term, and you just like try to get there. And then once you get there, there's a little bit of a victory. You're like, oh my God. But you realize like, oh, there's a lot more to do, and probably this journey won't stop anytime soon.
Yeah, that's a lovely analogy. That's exactly what it's like, and that's the thing, isn't it? That growth over time, when you look back, always looks really smooth.
Right.
I'm always fascinated by that when you talk to people who've been super successful, there's two things. Is one, they've got so many war stories along the way, and if they haven't, then I just always think they've forgotten them. And then like how much luck plays a part, and as well, just like getting lucky, meeting the right teams, for example. Like, how do you stumble upon your team? Because I was going to ask you that, is Stable evolved from the kind of original fleet business? Was that what it's called, or was it you completely restructured, new team, or is it the kind of original team?
No, yeah. So it was a friend and I that started it. So completely separate entity. It's called Vervoer. It's a Dutch word. I'm originally from Dutch ancestry, so I worked in these kind of like odd sounding words into all the companies that I had prior, and none of them cared. People like, if you're going to build a brand, you can't have these these words that nobody can pronounce. And so Stable was completely separate. My co-founder, the first one, Stephen Decker, he was an investor in that fleet, but didn't really have any operational work with it. It still exists. We still own it. It's run by a couple of really, really smart actual fleet guys. Like, these guys run fleets as a business, and so they do a much better job than I did of running it. It's I think much more successful now without my day-to-day involvement.
Yeah, that's always slightly depressing.
Know what you're not good at. I feel like that's a part of growing up, right? I can't do that. Like, can't play in the NBA. I'm not gonna be a footballer. I shouldn't be running a fleet.
Yeah. No, fair enough. So the founding team of Stable. I'm genuinely interested. Like, who was the founding team, and then talk to me about the sort of size and shape of the business now. How many people you've got with the business, and I'm always intrigued about how you came to find these people and get them on board.
Yeah, so I still kind of pinch myself on the luck we've had hiring people. So I don't know what it is yet. If we can figure it out, I'll let you know, because we'll try to keep replicating that as we hire more people. But so Stephen, I originally met, he and I worked at a, what would be today considered a fintech, but it was a small kind of like consulting slash technology provider for trust departments in the US. Since we worked there in like 2002, so many years ago. I was employee number one, and he was intern number one, and then became employee number two. And so Steve and I have known each other for a very long time. And when I kind of came up with this realization of the insurance deficiency for mobility, I went and talked to him about it, and he's like, "This is really interesting." And I'm kind of done with. I mean, I don't want to. He was doing some product management for automated manufacturing at the time. So kind of he's a product manager by trade, over the last 15 years, that's what he's been doing. Kind of was looking for his next thing. So convinced, he was actually easy to convince, much easier than I had thought. So him and I both quit our jobs, started focusing on a stable full time in 2018. Didn't get paid for the longest time, him and I together. So the fact that he stuck with me, like, I'm still pretty amazed with. Only within, I think we got our first kind of real investment last summer, so just under a year ago, and then started paying ourselves finally. But even then, pretty paltry sums to what we were getting paid prior. So got him involved early on, and has I like to say to him, blood in, blood out. Like, it's gonna be hard for him to leave, or I'm gonna make it hard for him to leave, because I love working with him so much. And then for 2 years, it was just the two of us. So 2018, 2019, basically up until the pandemic, we had different people kind of helping out, more from like a part-time or contracting perspective. I had a part-time CTO that was trying to help us with some of the technology stuff that I had built. I'm like a part-time engineer. I'm not very good at it, but I can like hack things together. For production, you definitely want somebody else handling it. But yeah, we were definitely naive from an insurance perspective, where we thought, okay, this is an interesting idea. We see a massive gap in the market for this right now. We should be able to convince a reinsurer that this is a good idea. And I think at the time, 2018 was kind of like probably the peak, 2018, 2019, the peak of Lemonade, Metro Mile, all these companies were raising a lot of money, potentially going to have an IPO soon. And from the press, it made it seem like this was a really easy thing to do. Go talk to a reinsurer, get capacity, find a front, launch your product. In reality, that's much different, especially the reality of, we were trying to do this in New York first, which is, for your non-US based listeners, one of the more difficult, probably the most difficult state from an insurance regulatory perspective to launch in. We were trying to do it in commercial auto, which has not performed well, for the last couple of decades. And we were trying to do it in this space, in rideshare, where there's like a pretty big lack of data, at least from an insurance perspective, right? Like how actuaries were handling this was kind of unknown yet. So yeah, we got told no a lot. That's why we took the digital broker opportunity when that came up for us to do that. We at that time, though, we had done a really good job of collecting a lot of advisors that were the actual insurance people, the people that knew what they were doing in the space. So a former guy from Philly who's gone on to do his own thing in the MGA space with some of the McGuire brothers. And this other guy, John Salvucci, who ended up being our third co-founder. So John was a former underwriter at AIG, and then was running his own independent agency for about a decade. And he came on as an advisor just to help out from a partnership perspective. This is how you need to talk to a carrier. This is how you talk to a reinsurer. And then after about 6 months, he was having such a good time working with us from an advisory perspective. He asked if he could come on as a co-founder. So I couldn't believe it when that happened. I was like, well, yes, absolutely. We'd love to have you. And so yeah, John became the third co-founder in early 2020. And since then we've kind of hired as needed. So we've had a few engineers that we've hired. And then since we've received some of our funding and actually have the product going live, obviously you need a team to support you with that. So hired a director of operations, director of claims. This guy, Dylan Brand, who's probably did the first rideshare claim in the US. He worked for a carrier that did rideshare very early on with Uber. And he's probably seen at least the lion's share of rideshare claims in the US. So we're lucky to bring him on. Our director of operations, Tiffany, she's amazing at organizing us and getting us to do the stuff that we need to do to actually execute. And then, yeah, so we've just been lucky finding people. I think we found both Dylan, we knew just from our network. Tiffany, we found through Angel List. And again, I know that our luck is going to run out at some point. You know, one of the reasons we like to have conversations with people like you, where at some point we're going to have to scale, we're going to need to hire quickly, and you're not going to have this great network of people built up or kind of like somebody slotted in, ready to go. And so how do you think about hiring those people when you don't have a month to hire them? You have like 2 or 3 days, really, like, and you want to have them live in 2 or 3 days. It's still going to take longer than that, but these processes just can't take as long as we've been allowing ourselves to have to this point.
Yeah. It's funnily enough, I'm writing something at the moment, which is a bit of a guide for how to recruit for a startup. And you know, most of it is me setting out if it was my money, this is what I would do. And you know, and a lot of it's having like processes and procedures, and there's always this sort of trade-off, and you know, there's the cost of it, and then there's the time component. And you know, my favorite conversation to have with people is say, oh, we don't spend anything on recruitment. I'm like, well, you're doing it yourself. So what's your time worth? You know, it's a really obvious thing, but then that doesn't mean that you've got cash, because certainly, like, I'm trying to hire at the moment. I was trying to hire a couple of years ago. I didn't have the money to use an external recruiter. I now do, and you know, recruiters use recruiters. No surprise there. So I like, you know, but it's when and where, and you know, one of the things that I always say is that you have to always be recruiting. So it's no surprise to me that you got some of those people from your network, and that's, you know, that's why things like InsurTech Insights are so important. You know, it's, you meet people, you stumble into someone that happens to work in rideshare claims, and you're like, right, that's going in the Rolodex for at some point in the future, right? So
yeah, I mean, literally what happened with Dylan, right? I've known him for a couple of years, but we really bonded at ITC in Vegas. You know, I think, again, that was my first conference after COVID, and everybody was happy to be out. And so we spent many nights out with him, and after that, we're like, hey, we should all work together. So we started building towards that. But yeah, I think what I've realized is probably the biggest role for a CEO, at least in an early stage company, or a much bigger role than maybe I had realized, was kind of continuing that recruiting effort, meeting people, talking to them about what they're interested in, why they would want to move, how you can get them. And so, yeah, that process can take a couple of years or a year. You know, then I'm usually upfront, like, hey, I want you to think about working with us, but I know some people do it very like kind of coyly, like, hey, I just want to grab a coffee and kind of chat with you about things. Yes. So I think both approaches are fine, but yeah, I think the successful startups from a talent perspective, like they do have to put the effort in one way or the other. Either you pay for people that you trust to do it, somebody like you, or you have to do it yourself. But it is a cost component, whether you realize it or not.
Yeah, I've got my shameless list of people that I tell every time I speak to, and they're friends of mine from the recruitment industry. I'm like, we will work together one day. This is going to happen. Like, I mean, one I've probably been trying to hire in for about 6 years, so I don't think that's happening. But you know, now it's just this like novelty thing that I have to throw into every conversation we have. But no, I think it's important. And obviously, you know, innovation is a large part of what we like to talk about here. I've got a big, not particularly surprising belief that starts with leadership. So I was wondering, like, how do you create that culture in your role? How do you kind of try and promote innovation within your business?
Yeah, I mean, this is something that we've thought a lot about, and like in the context of like, who should we be hiring, especially from an insurance perspective? Because I think so in general, every hire you make as an early stage company is extremely risky, right? You don't have a lot of time to figure out if this was a good hire or a bad hire. And if it's a bad hire, you need to like go out and start the whole process over again. So it's putting you on the back foot, whatever you were working on, whatever initiative that person was coming in to help you solve. So I think that's one reason you have to put so much work into figuring out who you're going to hire from an early stage perspective, just because a bad hire is extremely detrimental to your success. But yeah, from an insurance perspective, I think it's a little bit more difficult. We've actually done this on both the engineering side and on the insurance side, where so on the engineering side, I think we've been more open to non-standard engineers. So our first engineer hire was somebody who was a broker, but was teaching himself how to code. And you know, we took him on, and it was great, like great relationship. He worked with us for about 2 years, built his talents up, and actually he just recently left for a really good role. Sad to see him leave, but we're happy for him to progress within his career. But that, yeah, I feel like typically you wouldn't hire that person, with their talent level or lack of experience if you were well funded or you had like a long runway for mistakes. So we just said, hey, like we think this person understands insurance and they're willing to like work a lot to get up to speed on the engineering side. And so is that person kind of going to learn everything they need to learn on kind of their own time, like realizing this isn't kind of a 9-to-5 job now, or will they not? So that's important from an engineering perspective. From the insurance side, it's a little bit more difficult. We haven't dealt with this other than with Dylan, who, he came from a larger insurer. But I know we will have to soon as we start having to hire more insurance related people. So whether those are agents or whether those are underwriters, actuaries, things like that, a lot of stuff that we contract for right now. But as we go to scale, we know that those are going to be full-time roles that we need. And I think you can do one of two things. You can pay up for a really talented, name within the industry. And I think there's benefits to doing that, but also a lot of risks from either like a cash burn perspective, or this person comes in and maybe doesn't realize like, I don't have, 2 assistants helping me anymore. I don't have an email that I can send off for supplies. Like I have to be self-sufficient within this organization. And if you don't, just note that up front to them, then all of a sudden you're spending more than maybe you realize, like kind of building the infrastructure that they would need, for a much later stage company. So yeah, I don't know that we've solved it on the insurance side yet. We've gotten lucky on the engineering side, I would say, where we've hired more non-traditional people. We've hired traditional engineers as well, but we've been lucky so far with the non-traditional ones. On the insurance side, I'll let you know how that goes in the future. If we are thinking about it correctly, where it's kind of a diamond in the rough type thing. Like, hey, like, can we find somebody within an insurance organization that isn't very happy? Maybe they internally tried to do, whether it was a startup or a new initiative or whatever, they don't like the politics of it anymore. They want to have a little bit more ownership over the process. They're very talented, but maybe they're a bit junior. There's a lot of people that they have to go through to kind of advance their own career. That's like a perfect find, I think, versus like somebody who on paper looks great because they have 20, 30 years experience and they've done very impressive things and held a very impressive role. But to pay for that person is going to be expensive. And then to build the infrastructure to keep that person happy is going to be expensive. And then do they even perform well? And if you're trying to innovate, if you're trying to do something different, not the same old thing, that maybe an insurance company, a larger insurance company can work, incrementally, right? Incremental progress is good, probably from their shareholders' perspective. For a startup, it doesn't work that way. You do have to make a meaningful change in whatever you're trying to do to have differentiation from an incumbent. And so if you can't find the person coming from an incumbent that's willing to help initiate that, then it's not really a good hire either.
Yeah, I'm always amazed that we don't do more in the sort of psychometric assessment or personality profiling or things like that. I'm surprised that we don't see as much of that, because it doesn't matter who I talk to in the startup space, but we're always having the same conversations. Is that, when we listen to that, what you were saying, I think you're absolutely right. But really, we're talking about how comfortable with change is that person, and how much resource do they need to make meaningful difference in our business. And I think you can find people with 30 years experience that are desperate for change and are invigorated by the idea of doing something different. But also, I would say, as a rule of thumb, it's much harder, because if you come from absolutely incremental growth and, I've talked about this a few times, insurance is really bad for having very, very narrow roles. You are a specialist underwriter in a particular class, in a particular region, in a particular area of the world, and you write that business via 5 or 6 broker partners. Like it's really quite narrow, and that means you're brilliant at that thing. But actually, stick that person inside a startup and go, you've also got to get involved with the product team, and you might actually have to sit with developers for a few days a week just to kind of work this out from a coding perspective. So can you help us with the workflow? And you're just doing all these different things. And that's the thing that we have to test for, that's really challenging.
When I think so, insurance is right or wrong. A lot of the people that seem to work in insurance are more risk averse, right? So more conservative in nature, which is not, I'm not stating that as a bad thing. I think it's probably a lot of people within incumbents would agree. In fact, like a lot of our partners, they would say the same thing. We are too conservative to take this type of risk to work with you. It wouldn't work within, the framework of what we're trying to do to create value for our shareholders. And I think you need to the concentric circle of maybe people that fit in that organization that could fit in ours is probably quite small, or at least much smaller than a lot of other industries where I think you could go out and, I can't think of an example, a different startup in a different industry could go find somebody that maybe from an incumbent in their space that would make a lot more sense, would be willing to take some risks. I think it's just hard. They're not impossible to find, but I think it is a little bit harder just given the type of makeup of people in the insurance space.
Mm-hmm. I'm glad it's quite hard, Doug, I'll be honest, because that's why I've got a job.
That is true. Yeah. Keeping you in business there.
Yeah, it is. Talking about hiring some more, you and I talked about insurance as a social good. And I think particularly with things like what you're doing, we know that particularly immigrant community find it harder to get the kind of societal support from financial services organizations, insurance companies. And I really believe insurance as a social good. Does that ever play into your thinking on the sort of types of personalities that you want inside the business from that perspective, just the cultural element?
Yeah, so this is interesting as well, because we're early. I don't know that we really have a culture developed, but we think about what having a culture looks like, right? At least having a bad culture, are we seeing this move in a direction that we're not comfortable with? And so I think, even a corporation is it's a makeup of whoever works there. That's at scale, right? You have hundreds of thousands of people potentially working there. Maybe there's pockets of culture across different different cities that you're working in. But at its smallest part, we are at that team level right now. We have a small team. Anybody that we hire that maybe isn't a good cultural fit, or is somebody who wouldn't move us in the direction that we want to think about from a cultural perspective, would have a negative impact on, I think, what we're trying to create, both as a company, but then from a product perspective as well. So I wouldn't say that we have a political bent on it, but we do think about what does this person do? Maybe what part of the country are they from, or what have we seen them do in the past? You have to be very careful, at least in the US. I don't know what things are like in the UK. There's limited numbers of questions you can ask from a hiring perspective to get at that type of feedback or trying to understand that. But you can usually tell early on, whether you have similar interests or at least interests that align, or things that you maybe don't know enough about, but you want to learn more about. I think about, hopefully I'm not blowing up Tiffany here, but she came on, she was our first female hire, which is another unfortunate side effect of working both in technology and in insurance. It can be a little bit more difficult to find females to work with, but it's I think having a diverse team, whether it's gender orientated or background orientated. And actually, in the US, there's just there's a large amount of diversity, regardless of kind of what your background is, just by given where you grew up, maybe what your social status was. But yeah, we have this internal book club, and we kind of talk about different books we want to read, and we're talking about reading Thiel's book again with some of the new people, and she's like, hey, actually want to in reading that book, I want to read there's a book called Brotopia, or something about Brotopia, which talks about Thiel and kind of the PayPal mafia. We're like, this is good. This is having this new person in with a different background, different experience, even though she's in San Francisco, technology hub probably of the world. She's like, hey, you guys need to think about this other aspect. So if we want to make this a more diverse place, or a more hospitable place for people to work, we should think about, none of you are Thiel, none of you are probably of that kind of libertarian bent, but we should think about how you're talking about even the books you want to read, right? What you're suggesting people in the company want to read. So you do get to know these things pretty quickly. I think that was like within a week of her starting. She had made that suggestion. You're like, okay, this is good. Like I need to take this, and we need to learn from this. But yeah, so it is a big part of it. So with our customer base, so obviously these are not wealthy individuals that we're working with. They are not large corporations. It's not a B2B product in essence, with like a sales team that we're selling into. It's typically kind of an overlooked customer category right now. It's a very large growing customer category. And I think at scale like this, the market opportunity is very interesting, but people really, companies usually that are building products for this user base, at least to date, haven't really thought about, okay, like, what is this person going through on a day-to-day basis, right? Can they live beyond one paycheck? Like if we take 2 weeks to get their claim resolved, what does that mean to them from a personal level? So we do ask questions like that, like what do you know about rideshare? Do you follow what's going on in rideshare overall? Do you kind of understand these users' mindsets? We do a lot of customer interviews. John Salvucci runs with a lot of those right now. And so we record them and we usually ask, hey, is it okay if we share this with our team? And so that you really get a sense of like what these people are dealing with from a day-to-day perspective. And it's not always about insurance, right? They just kind of need a shoulder to cry on, but somebody to kind of vent to sometimes, like, hey, these are all the terrible things we're having to deal with. And then you kind of see how people react to that. Do they come up with new ideas for new products or ways to fix those problems? I think that gives you a good idea as well, if they're a long-term cultural fit. Like I said, we're so small right now that we haven't really had anybody kind of fall outside the norm of what we think is kind of a good move forward from a cultural perspective.
Yeah, and I think it's kind of controllable when you earlier, but I always say that culture's kind of, yeah, it's just the net result of the people you hire, as exactly as you said at the top, and you can't. I love it when people try and force and shape that culture. Our culture's going to be this, or right. We put some. They've just become words on the boardroom wall, right? Like, right. You've got to hire it into the business, and it's embarrassingly, this podcast is out today, and there was a brilliant phrase, found from CEO of Nancy, then came out with this phrase that was something about adding culture, like basically you don't want cultural fit, you want cultural kind of, I can't remember, I'll have to cut it in, but it was essentially about the kind of danger of cultural fit, and exactly to your point where you've got someone challenging your views, as long as it's a kind of collaborative challenge. It's like you need challenges, but they can't be like individual mini wars every time there's a kind of conflict.
I think that's when it moves into like cultural forming to like the political aspect of probably the reason. Definitely one of the reasons that I loved working at Mercer. Like, it was a great team that I worked with, but I was just not cut out for like kind of the corporate back and forth. And I think that's what culture kind of develops into, is more of like a political type, hey, how can I as an individual get ahead, or my team get ahead, versus like moving the entire organization forward. This is like a lot of thoughts on just like corporate versus startup, and what happens when a corporate buys a startup. Like, how does that change the culture? But definitely out of the scope of this conversation. But I like that idea of stretching and seeing what breaks and what doesn't break. I think I maybe have a sense of what she was saying. I actually had a great chat with her in London. We were at a lunch together, and really enjoyed kind of listening to kind of how she put her team together and what they were working on, and some of her thoughts around leadership and things like that. So I can kind of get a sense, I think, of maybe what she was directing this towards. And it is like, you can't slot in culture. Like you maybe as a CEO or a co-founder, you have thoughts on how you want things to move forward. But I think the more you try to force things, like you said, that later on, that actually creates problems as well. You're like, hey, like, this is not what I joined up for as an employee, right? I want to try and make my mark on my team or on the company overall. So you need to like take that feedback in and kind of see how people change the culture and move it forward. As long as it's moving in a way that's positive, like has a positive impact on everything, which I think there's ways to measure and try to correlate with culture itself. then you as like a co-founder shouldn't try to like stop that from happening, or a CEO stop that from happening. You should like say, hey, like how can I help to kind of push this even further along, and advocate for all of these people that are they're the ones that are building the culture. It's not even like the leadership team. I think it's the company overall. It's the day-to-day people working with the customers in the trenches, things like that, that really are going to drive how you form your culture over the long term.
Yeah, it's one of those things you just, I think at a certain point you have to let go of and just hopefully hire well. I wanted to bring you back to the business. There's some very clear partnership opportunities that I'm seeing. Kind of how much is partnerships not necessarily an important part of the business now? Do you see it growing via partnerships? What's the kind of like strategy around that? Because I imagine there's quite a few opportunities in place like that.
Yeah, most definitely. So I think obviously like the top partnership, at least on the rideshare side, would be working with Uber or Lyft and selling through their platform. I think there's steps before that you can work out where you are offering some benefit to drivers on their platform, and maybe they get some compensation, some additional compensation for getting better insurance, or insurance more directed towards the types of protections that a rideshare driver would need, and potentially are saving the rideshare platforms a little bit of money on their insurance costs as well. I think those are like baby steps that you can take. The data sharing is very important. We underwrite based off of some of the data that we get from the platforms. So we try to have a good relationship with either the vendors that are helping us get that data, or the platforms themselves that are helping us get that data. So those are important things to have in place. But yes, we think about it from like a data sharing perspective, but then also potentially a distribution perspective more down the road. Definitely. I would say on the car share side, that's a little bit more nascent in the US. And so you can usually get some of the top level people at the car share organizations to chat with you. And there's actually, in the US anyway, it's a huge supply issue for rental cars right now. And so car share platforms like Turo and Get Around, Hire Car, have been doing really good business because of that, but they themselves have a supply shortage now. And part of it's related to insurance. Like you just can't find insurance is really specifically directed towards car share. So it's kind of like where rideshare was like 5 or 6 years ago. And so we're coming in and helping solve that problem. And I think that's a little bit easier of an ask to go to the platform and say, hey, we can help you solve your supply side issue here by giving you this insurance product, or even your customers this insurance product, and helping them grow their fleets. So those, I think you have to be somewhat opportunistic and say, hey, like where could I make, like we're a small team, John handles a lot of the partnership stuff. Where could he make the most effort for his time in getting a partnership going, and what kind of partnerships do we want to think about to get in place and go out and like either raise again, or think about how to like build further reinsurance relationships kind of around them. So that's how we think about partnerships right now, but definitely down the road. I mean, the holy grail is probably distributing through a large rideshare platform and car share platform. And then that just helps you from a customer acquisition cost perspective, obviously, but then having that getting in front of as many customers as possible, as quickly as possible, is a nice thing to have.
Yeah, because I know less about the US landscape on this, but we had guys Collective Benefits on the podcast, and those guys obviously do benefits for not just rideshare, but it's for the gig economy workforce. But they would have partnerships like that. Are there similar businesses in the US focus that you could partner with?
So actually, one of the more interesting things is there's a lot of other software tool providers for these communities. So the car share in particular, there's a couple of fleet management platforms that have already interfaced with the car share platforms. So as you grow a fleet, they help you do kind of like time management and who's using your vehicle when on which platform, kind of like aggregating that all together. So I think selling through them is like an embedded option through them has kind of been an interesting thing that we've been looking at. There's 2 or 3 kind of in the US right now. There's a couple of international ones. Again, I think we're going to see that space really grow, where you're going to have, so these platforms of whether it's a car share platform or rideshare platform, has opened up the opportunity for people to kind of run these small fleets. We had one of our advisors called it distributed fleets, which I think is a really interesting concept. It's not me having 1,000 cars, Avis or Hertz sitting at the airport. It's me having 15 cars and I kind of park them around my area. And I either up to a certain point, I'm delivering them to the airport myself. And then maybe as I grow a little bit, I have an employee that helps me do that. So really this idea of like little pockets of fleets kind of all over the place at a much smaller level. How do you ensure those? What are the risks available to those? But then how do you get in front of them as well? And again, we think about it from if there's another distribution or another value, whether it's the platform themselves or some of these fleet management programs that we've been talking to that already have that customer, it makes a lot of sense for us to try and add value in from an insurance perspective, especially if there's only a few insurance companies that currently offer these types of things. I think then it's much easier to get on those platforms than if there was like 20 or 30 of you kind of sitting around doing this.
It's one of those, it seems like interesting timing, like really good timing from your part, from a kind of launch perspective. So I'm really conscious of time, so I'll make this kind of I suppose our last question as such. But you raised some money relatively recently. You've been investing and growing the team. We're in the second quarter of 2022. What's 2022 look like for you from a growth perspective, and going into 2023? Where do you envisage the business being at that point?
Yeah, so for the rest of 2022, really our focus is just getting live in a few more states. So getting both the rideshare and the carshare product up and running. So first in Illinois, and kind of it's not 100% set in stone, but kind of looking at Arizona, Texas, and either Tennessee or Georgia, kind of within the next 6 months or so, definitely by the end of 2022. And then trying to do kind of a larger state rollout in 2023 with that same product. But I think one of the big things that we've realized, and this is kind of brought it full circle to what we were originally doing with the data with the fleet, which is really more credit monitoring. Like, hey, like, is this a driver that we even want to rent to? Do they earn enough money for us to rent this vehicle out, or are they going to be problematic because we see these large fluctuations in earning? What we found is this driver community and small business community, like if you think about it from the kind of the distributed fleet perspective, doesn't have a lot of tools built for their specific needs. And so we've solved for some of those. We have a driver report that we give out to drivers that helps them aggregate and automate their earnings tabulations. They don't have to do that on their own across all the different platforms. We've started to layer in some expense options, which has been interesting with gas prices in the US. I think maybe worldwide have been increasing just because of the Ukraine conflict. Having the ability to kind of track that through our platform has been interesting to see some users do. So really, are there software things that we can do where we build it once, right, and give it out either free or low cost, because a lot of the data that we already need to collect from an insurance perspective that we're collecting from the platforms, and give value out from an analytics perspective to drivers. We'll continue to develop those things over the coming years. But we've also realized there's just other products that these types of customers need, whether they're banking orientated, life and health, accident, disability type stuff. So some of the stuff that I think Collective is doing in the EU is not, there's a few companies doing it here in the US, but it's pretty spread out. And so if you have this active customer, our product is mandated, our auto liability product, you need a auto product of some type. You don't have to get it from Stable. You should get it from Stable, but you don't have to. What can we, so we've built this great relationship with this customer. What other problems do they have that we can potentially help solve because of the data that we're collecting? So can we give them a differentiated banking product based on some of the data that we're already seeing? Instead of having to like acquire this customer all over again, we just grow their share of wallet, hopefully solve a few other problems that they have. So that's kind of our goal for 2023 and beyond, is just figuring out what else we can do within this space to help these customers. So we're going to be doing a lot of customer interviews once people are live on the insurance product, saying, hey, like, how do you feel about the product that you currently have? What can we be doing in addition to this to like help you out, with other issues that you're having? So that John's job will not be done for a long time as far as like figuring out how to solve all of the issues that our customers do have.
Poor John, you need some more hands, I think. But no, I mean, it makes sense. Yeah, it's quite nice to hear someone just digging down deeper into that kind of customer experience. Like, what problems can I solve for you? And it's the simplicity of that is understated, because the amount of people I speak to that are trying to do just like distribute into different different lines of business, for example, and sometimes that's not the solution. It's about kind of digging deeper. So thank you so much, Doug. Pleasure as always. It's great to reconnect, and we said we'd do this, and we have. So I'm really pleased. So thank you so much for being a guest on the podcast.
No, thank you. Thank you for having me. We'll look forward to seeing you in a month or so. Month and a half in New York, and we can catch up then. Yeah,
InsurTech Insights New York. Should give them a shout out.
We should give them a shout out. So I will say, so I've told, actually, I have if you have 2 minutes, I'll tell a couple of good stories about ITI. So June, they did a June conference in 2019. I thought was the best conference that I've been to. No offense against ITC. It was more manageable and a little bit easier to work with. Not quite the mass of people that were at ITC. And so loved it. Then, COVID obviously shut the conference circuit down. But I ended up going to the London event, or obviously where we met, and I got the same feeling again. I was like, this is really great. I think what they're doing is good. Definitely a conference that anybody in the insurtech space, or incumbent, or just anybody that's interested in innovation and insurance should be attending. But my little story is, and hopefully he doesn't get mad at me for saying this, or think that I'm like calling him out. I rolled up to the conference in London late. My flight was late. I got to the hotel, got showered, and finally made it over. And as I'm walking in, I see Christopher Lumber, the guy who I think started it, or he's definitely the CEO now, like outside, kind of like gathering trash up. And I was like, this is amazing. Like this guy is, kind of doing everything. And I called him out. I was like, hey, like you run this thing, right? He's like, yes. I think he's German. I think he's German. He got very humble and very rare. I was like, oh, this is so cool. So been wanting to tell that story for a while. I've told a few people internally, but just like the guys that are running the organization, the guys and gals that are running it are amazing. And so it's really cool to see them have the success that they're having. And definitely, if you're in the New York area, or if you can make it to the New York area late May for ITI, I highly recommend going.
Yeah, that's that. I can't think of a better startup image than that. Like, you put on this big funky event, it's all expenses paid, and you're outside picking up trash. That's
they're a startup too, right? Like that's exactly. Yeah.
That's entrepreneurship in a nutshell.
Exactly. Yeah.
Awesome. Well, look, I look forward to seeing you there. Thank you again, Doug. An absolute pleasure as always.
Yeah. Thank you. Thanks for having me.
Cheers, buddy.